time the year ends. Now that's heavily weighted with oil, and it really is a tale of many different commodities when we talk about what's happening in that world. Will prices rise in 2013 for the commodities you follow, the soft commodities?
Yes, well, that's correct about the CRB Index. We're focused more on the agricultural commodities on my team, and as you look across the entire commodities complex, you see that agricultural commodities tend to be less correlated with the broader economy. It's more of a defensive play, and this year those commodities, not only has demand globally remained strong for food, but commodities this year in the softs complex, in grains and oilseeds specifically, saw a very large supply shock because of the worst drought in more than 50 years in the U.S. So if you're looking at grains and oilseeds and soft commodities, we actually are not looking at prices being down year to date, but up. In the case of, for instance, soy meal, up more than 40% since the beginning of this year.
Does that continue through next year?
Well, we are bullish still on grains and oilseeds in the beginning of 2013, particularly for grains. We think that demand rationing, using less of grains in particular as a result of the supply shock, has not fully been accounted for in current prices. So we think prices are going to continue to rise for grains in the beginning of next year in order to slow global consumption.
You point out in a recent report these prices are very volatile to start with, and you actually see short positions unwinding early in 2013. Tell me a little bit about the market dynamics that you're looking at and volatility as we head into the new year.
Well, at this stage of the game, we really don't have many buffer stocks, and we haven't had for a few years in the grains and oilseeds complex. And when you don't have very many buffer stocks, if you have a drought in one or two parts of the world and supplies shrink even further, it has a much more dramatic impact on prices. And that's the situation we're in right now. We are expecting a better weather next year, higher area planted to allow supplies to increase. But if that doesn't come to fruition, the fact that we don't have any buffer stocks at this moment means prices could continue to rise and reach new highs in the coming year.
I always love talking to commodity people about China because you have an interesting perspective in terms of demand. What's your view on what's happening with the Chinese economy vis-a-vis demand?
Well, China and I would say also India, in these countries, if you're looking at them from a demand perspective for many of the other commodities, energies, or metals, it's a bit of a different story. But the long-term growth in demand for agricultural commodities is something that we expect is going to continue for agriculture. We're seeing them eat more protein, their incomes are rising, and this is something which is going to continue to fuel the growth for agricultural commodities globally, is the demand in these emerging economies, particularly China.
What are some of the commodities you think in particular will reward investors in 2013 in terms of price gains?
Well, at the moment in Q1 of 2013, we're probably most bullish on corn and wheat, the grains. We have seen a fairly strong move recently in soybeans, and we do expect that we'll have a large South American harvest for soybeans, which is going to allow those prices to ease. But in the grains complex, we're really not going to get much of a supply online until the North American harvest next season. We've continued to see feed demand remain strong for grains, and we do think that grains would be the best, is our most bullish call for Q1 of 2013.